Assalamualaikum. Welcome to Islamic Finance at the Capital. I'm Amirul Haji Muhammad and I will be your host for this episode. With us today is Professor Dr. Ahmad Kamil Maidin Mira, who is the head Department of Finance at the International Islamic University of Malaysia, and he's also the author of 4 books, among which are Islamic Gold Dinar, The Theft of Nations, The Viability of the Islamic Dinar, and Real Money. Welcome, Professor Kamil.
Thank you.
Basically, your areas of interest are the Islamic Dinar, among others.
Investments, capital markets, and also in economics, macroeconomics,
Right.
and economics of social issues. These
Right.
are my interests.
Okay, for the first segment, we'll be doing on a very simple thing for you, which is the Islamic deposits and the types of accounts in the market.
Okay.
Can you go through with us what are the types of accounts, Islamic accounts in the market, mainly from the business perspective?
Perspective, yeah.
Right.
The first of all, thank you, Amirul. First, let me explain the Islamic banking itself. In Islamic Bank, for example, in Malaysia, it was established in 1983. It was basically filling a gap in the market.
Right.
There was a demand for Islamic finance. Why? Because the conventional finance basically was involving in riba transactions, right? So we have Islamic Bank that came and basically gave a solution to Islamic perspective in financing. So Islamic Bank is basically an intermediary between the surplus units and deficit units. So here Islamic finance is here to play the role between the savers and borrowers, basically borrowing. So what are the kind of instruments that we have in the conventional? Normally we put money in a deposits that earn interest, right? So here in Islam you can't have that kind of arrangement. So we have different kinds of deposits. First is like wadiah. Wadiah is a deposit. So wadiah is where you put your money, basically for safekeeping. But you can also let the bank use the money, and the bank can give you a certain return at its discretion. If it makes some money, then it can give you some money from the deposit.
Right. But this is not interest when the bank
Yeah,
returns.
that's right. Because
Right.
it is it's at the discretion of the bank, technically, right?
So basically, under conventional system,
Mm.
they will promise you a certain return when you put in, but under a savings or current or whatever concept,
Yeah.
they do not promise, but they give a discretionary return.
There's supposed to be a return, but in today's operations, you find that it is almost the return given is almost like the interest rate, the rate.
All right. Okay.
There are reasons for that. Market forces will force the banking system to act like that. But theoretically, that's what it should be. It is
Right.
It's a deposit. If you allow the bank to use your deposit, then it can make some money out of the deposit and share the returns
Right.
at its discretion.
But if market forces decides on the returns which are similar to conventional banking, then what is the point of having an Islamic deposits account or
Yes, that one I will come to later perhaps.
Right.
Why such a convergence takes place and
Right.
how we can avoid it.
okay?
So that you need to understand the macro picture and the working
Right.
of markets between Islamic and conventional.
So basically, we have for the savings or more from the business perspective, a current account which is based on the wadiah concept,
Yeah.
right? What other accounts are available then?
But of course, you can also put in investment account,
Right.
like general investment account. If you put in an investment account, then the bank will use your deposits to actually invest in some businesses, and there you can have a profit sharing arrangement with the bank.
Right.
So then you can there is more contractual rather than at the discretion of the bank. So there's going to be a return from investment account.
But isn't this available under conventional, a profit sharing kind of arrangement under conventional account?
Generally, in the conventional banks, it is just a deposit. You want to go into profit sharing, then you will have to go into some other mode. For example, like mutual funds or
Right,
that
right.
kind of.
More for capital market.
Yes, that kind
Right.
of.
So basically, one of the interesting or differentiating aspect for deposits in Islamic finance or Islamic banking
Mm.
is the mudarabah account.
Yes.
Right.
So that means the mudaraba is where it's a profit sharing, but you know it is slightly different between the musharaka because you provide the entire capital. The bank also invest the money, and the deposits the returns are shared. But in the case of losses, then the capital provider would have to bear all the losses in mudaraba
I
contract.
see.
Yeah.
So we have wadia for the current account.
Mm-hmm.
We have the mudarabah concept for
concept.
the investment account.
Yeah.
What other contracts or concepts are being used now?
But basically, in for deposits, basically, those either you put it under this kind of savings, and or it's a general investment. But this thing is actually on the other side, the financing side, for those who want to borrow, or it's not quote unquote borrow, right? Then the financing side is where you have a lot of the options for business community and like murabaha, also musharaka.
Right. So in terms of how would a bank decide on whether it's better for them to put in a current account or investment account, and which concepts or which contract would be suitable from a business perspective?
Perspective.
Right.
Yeah. No, the one for the to answer that, you see, it depends on the customer.
Right.
Is it you want the money to be for safekeeping? Like in current account, normally you don't get any interest because you need the money for your daily transactions, or you really want to invest the money, right? So if you want some returns in the conventional, people put the money in the FDs and things like that. If you are willing to part from the money for a period, then people will in conventional finance, the people you put FD and so on, fixed deposit, right? But here you can put in an investment account, then you can get a return. So it depends whether you're going to use the money, in a daily transactions, or you're willing to invest it for a period. Yeah.
Right. So in other words, it's basically on what are their needs for the funds that they have with them.
Yes.
What is the time period that they need to use the funds?
And also the risk averseness of the customer. If you're willing to take risk, then you can put in a
Right.
in an investment account that
But
takes risk. Yeah.
in Malaysia's banking history, have there ever been losses for mudarabah investment account that you're aware of?
Generally, you wouldn't find losses in general. The reason is
Right.
it's like a pooled account. So you put your money into the general pooled
Right.
account. So that money will be invested in a number of investments.
Right.
It's just diversifying in investment
Right.
theory, right? So with diversification like that, then once you get a certain return, so that return is generally positive because you're diversifying. Then you share it with your
Right.
the customers. Yeah.
So in other words, even though it's a profit or loss sharing contract, but in the history of the Malaysian banking system, ever since
Generally
the
going to be
establishment of
generally is going to be a profit.
right, it has been profits all
Because you see,
right.
if you invest in 10 businesses,
Right.
8, let's say, gives you profit, 2 losses.
Right.
But overall, in business world, you can
Still profit.
expect your profit.
Even though there's a downturn.
Even though, even it's downturn, then it can be in overall losses,
Right.
isn't it? It can be a loss, but generally,
Yes. So I think that is one of the differentiating factor between Islamic banking and the conventional banking, whereby they share their
the
profits or losses,
losses,
they call it risk shifting as compared to risk sharing compared to risk shifting under conventional
Yes.
banking.
That is theoretically under pristine model,
Right.
but in practice, there's some challenges there.
Right. You were mentioning earlier about the returns from conventional and Islamic deposits accounts being almost similar in nature. Why is this?
The reason why the returns are similar, or they tend to be move in same direction, is that because the Islamic banks and conventional banks, they operate under the same monetary and economic environment.
Right.
Dual banking concept, right? So in a dual banking environment,
Right.
so when things are different between them, then market participants can arbitrage the difference, play between these two, and
Right.
make a profit.
I see.
So for that reason, these two will be adjusting to each other, and then they will converge.
Right.
And then so that no one can make free money out of the
Right.
difference. So once they converge, then you'll find the profit rate that is given to depositors in Islamic finance will be almost similar to the interest rate in the conventional.
Right. So we have this in a dual banking system, and even in the dual banking system, we have the Islamic banking system whereby we have banks which are so-called Islamic banks, which are subsidiaries of the conventional banks.
Conventional,
For
yeah.
example,
Yeah.
CIMB Islamic, Maybank Islamic, or
Yes,
what
yes,
what you have.
Mm.
And we also have standalone Islamic banks like Bank Muamalat,
Yeah.
Bank Rakyat,
Uh-huh.
Ar-Raji. So even they are caught up in these conversions, or
Yes. All of them will be caught
Right.
up in the convergence. That's the reason why in Islamic finance, the interest rate is the benchmark
Right.
for the profit rate. It's very well known fact,
right.
isn't it?
So then what's the difference then between Islamic finance and
You see,
conventional finance?
today,
Right.
in my opinion, the Islamic banking system is almost converged.
Right.
You see, when I was a student in 1983, an undergraduate student, that's when the Islamic Bank was established. We were taught that Islamic banking is a profit and loss sharing banking.
Right.
Then along the way, in 1990s, we saw that from profit and loss sharing, most of the transactions were murabaha financing, fixed rate.
Yes.
Then it evolved into more floating rate. That's when we had the floating rate BBA and so on. Now you see the most popular the research and what instrument is Sukuk.
Yes.
And Sukuk works in a floating rate environment, you see. So the Islamic finance from profit and loss sharing banking, it has become basically a floating rate financing, a banking system, you see. So this is the convergence, the dynamics of the convergence.
Right.
And interest rate has become the benchmark for the Islamic banking.
Right.
So it's basically, in a way, it is now similar, but I think we can do something to separate them.
All right. Okay. So hold on to your thoughts, Professor.
Yeah.
We shall take a break and we'll come back and discuss Professor Kamil's talk later. Assalamualaikum. Assalamualaikum. We are back for the second segment with Prof. Kamil, and we will be discussing on the conversions of rates, and we'll be discussing other issues related to it. Prof. Kamil, just now you were mentioning about the conversions of the rates.
Yeah, that's one.
Can you further elaborate how money is actually created and the effects of the fractional reserve banking in the present banking system?
Sure. You see, this is actually one of my favorite areas to highlight. You see, the Islamic banking today, it operates under the fractional reserve banking, just as the conventional.
Just Islamic or conventional?
Conventional
both?
also, you can both, yeah. So what is a fractional reserve banking system is that it is a system, in a way, even the central bank uses to, increase or decrease the money supply in the economy, right? Even for its monetary policies, right? Now, how, for example, if you let's say you see the fractional reserve is when we deposit certain amount of money in the bank, the bank will have to keep a certain portion of that
As their reserves.
and the rest they can lend out.
Right.
So recently, before the crisis, 97 crisis, it was like about 13%. Then it was reduced to 4% during to solve the last crisis. Now it used to be about 2%. It is now maybe slightly more than about 4%. Let's say you take 4%, right?
Right.
So if you were to deposit, let's say, $1 million in the bank, then the bank will keep 4% of that. 96% you can lend out.
Right.
But the person who borrows that 96,
96%.
96% will deposit in another bank or even in the same bank, and the other bank can also keep 4% of that 96% and lend out the rest. So that process can continue.
Right.
Technically,
So it's like an infinite kind of
kind of
arrangement.
thing. Yeah.
So is that like I thought in under Islamic finance context you're not supposed to lend out what you do not own. Am I right or?
But here you see, for example, it doesn't have to be land. Even when we call it an investment or something like that,
Right.
the mechanism is still the same. because in the present system money is nothing real.
Right.
Like it's not like gold or or linked to gold anything.
Yes.
Just information, accounting numbers. So the accounting numbers get expanded like that.
Right.
You know, it creates multiple deposits.
Right.
So that makes the amount of money in the economy from a 1 million deposit,
Right.
it becomes, in our example, 25 million,
Right.
which is the 1 million divided by the 4%.
Right.
So the 1 million in total becomes 25. So that is an expansion of money.
Right.
But since the real economy,
An expansion of money. I find this interesting
yeah,
because so money is created of thin air.
yeah, in a way
Right.
it is. Yeah, in the present system since
Yes.
1971,
Okay.
when there was the link between money and gold was removed, then the whole world basically became under this fiat money, we call it, money that is not linked
Right.
to anything. It's fiat money,
Yes.
and fiat money under this fractional reserve, it just balloons the money.
Right. So, but isn't that to commentators or critics of Islamic banking backdoor riba?
I strongly believe it is the creation of money, in my opinion, is a bigger riba than the interest itself.
Right.
For simple reason, let me give you an example. Let's say I deposit 100 ringgit, just deposit
Right.
in the conventional bank. Right?
Right.
So if the interest rate is 10%, so at the end of the year the person gets 110.
Yes.
We say that 10 is riba
Riba.
because it is it is all risk free,
Yes, and-
right? But what about if the 100